Good morning, everyone. So this is the new topic of accounting for corporation. And the title of this new topic is called the dividend policy. Okay, this is the dividend policy. And company, look at the picture here. Company paid dividend, right? And these are the shareholders. They are going to receive this dividend. So according to this picture, you can see that preferred shareholders are going to receive dividend first, right? Preferred shareholder are going to receive dividend first. After that, remaining dividend goes to the common shareholders. So in case of dividend policy, what are the differences between preferred shareholder and common shareholder? So there are several differences between these two groups of people, but today we are going to focus on the difference between preferred shareholders and the common shareholders in terms of dividend policy. So according to this picture, the difference is clear. Preferred shareholder will receive dividend first, and after receiving dividend by preferred shareholders, remaining dividend goes to the common shareholder. And another difference here is that preferred shareholder already knows the amount of dividend from the very beginning. What is the meaning? The meaning is if you buy preferred stock today, you already know the amount of your dividend today. Clear? But if you buy common stock today, you don't know what is the exact amount of dividend for you. Do you understand? I repeat again, if you purchased preferred share today, you already know the exact amount of dividend you are going to receive in future. But if you buy common stock today, you don't know what is the exact amount of dividend. Because after receiving dividend by preferred shareholder, you are going to receive the remaining dividend as a common shareholder. So this is the difference between a common shareholder and preferred shareholder in terms of dividend. Okay. Now we see that preferred shareholder has two classifications. So although you are preferred shareholder, you are belongs to another two groups. One is called cumulative preferred stock, and another is called non-cumulative preferred stock. That means two classification for the preferred stock. Now we have several differences between cumulative preferred stock and the non-cumulative preferred stock that we are going to see now. So this picture is about cumulative preferred stock. So try to understand. The picture here. This lady first belongs to which group? This lady first belongs to preferred shareholders group, right? Then her second identity is she is cumulative preferred stock. And look at another lady, she is also preferred stockholders. Okay, she is also preferred stockholders, but she belongs to another identity. Her another identity is non-cumulative. Do you understand? That means if you are preferred shareholder, if you are preferred shareholder, you may belongs to cumulative or you may belongs to non-cumulative. And there are several differences between cumulative preferred stock and non-cumulative preferred stock. So first you learn what is the difference between preferred and common stock, right? Now we are going to learn what is the difference between cumulative preferred stock and non-cumulative preferred stock based on this picture. So what is the first picture about? According to this first picture, you can see that this lady very happy because she is holding money with both hands, right? With both hands. Some first find out the right hand money. What is the name of this right hand money? The name is called dividend in arrears. This is the accounting term. This is the accounting term, dividend in arrears, holding by the right hand money. And what is the meaning of this dividend in arrears? It means that previous year's unpaid dividend. So what is the meaning of previous year unpaid dividend? For example, you purchased preferred stock last year or 2 years before, but at that year, company did not give you any dividend. Do you understand? Today is 2023, right? But you purchased a stock, preferred stock, maybe 2020. So 2020 company did not give you any dividend. 2021 company did not give you any dividend. 2002 company did not give you any dividend. So previous year unpaid dividend is called dividend in arrears. Do you understand? So this lady is going to receive previous year unpaid dividend first. Then she is going to receive current year dividend. Current year means this is 2023. So what is the dividend for this year? She is going to receive dividend. So this is called preferred shareholder with cumulative classification. Okay, cumulative, that means money is going to add. Okay, money is going to add. First, previous year unpaid, then current year dividend. So this is the formula, you can see that. So cumulative preferred stock dividend equal, first amount is called previous year unpaid plus current year dividend. So do you understand this picture? Because if you can remember this picture, you can easily solve the question. Because this picture already have a solution, how to handle this kind of cumulative preferred stock dividend in the accounting book. Just remember the picture and try to understand the picture. So now try to see the difference between cumulative and non-cumulative. Look at this non-cumulative. So can you guess what is the difference between cumulative and non-cumulative? Yeah, previous year unpaid dividend is not going to receive by her, right? So as she is preferred stock, but her another identity is non-cumulative. Non-cumulative means they are not going to receive any previous year unpaid dividend. Look at here, previous year unpaid dividend are completely lost. Look at this last sentence. Previous year unpaid dividend is lost permanently. Permanently means if company did not give you dividend last year, it is your loss. You cannot claim this money. But you are going to receive only current year dividends. Okay, you are going to receive only current year dividends. So your question will tell you preferred stock cumulative, preferred stock non-cumulative. So you can remember this picture. So cumulative means it is going to add, right? Cumulative means it is going to add previous year unpaid plus current year dividend. But non-cumulative means no dividend from previous year, only current year dividend. Now we find that according to these three pictures, we find that we have preferred shareholder, we have common shareholder, right? Again, preferred shareholder are cumulative and non-cumulative. So we can make some classification. Who is the most priority? Look at this classification, 1, 2, 3, 4. So when company pay dividend, company should go this order. What is the first money goes to? First money goes to cumulative preferred stock, but first payment is for previous year unpaid dividend. Do you understand? First payment is for previous year unpaid dividend. After paying this number 1, okay? After paying number 1, go to number 2, pay the current year dividend. Clear? Then after paying current year dividend, goes to preferred stock non-cumulative, only current year dividend. Then remaining money goes to common shareholder. That means if company declared, for example, if company declared $50,000 dividend, so how to allocate this money? The allocation should be based on these 4 steps. Okay, allocation should be based on 4 steps. So go back to the picture again. This is the first allocation. This is the number 1. Okay, previous year unpaid dividend. Then this is number 2. current year dividend. And this previous year unpaid and current belongs to who? Belongs to whom? Cumulative. So number 1, previous year unpaid. Number 2, current year dividend for cumulative. Then number 3, current year dividend for non-cumulative. Okay. Then this is number 4. This is number 4. The remaining money goes to common shareholder. So you can remember this ranking of dividend distribution. Then it will help you to solve the question very easily. Okay. So if you can remember this rank, go these steps, okay, and distribute this money as a dividend. Now let me explain some questions. So Nathan Athletic April has 2,000 shares of 5%, $100 par value preferred stock. So read up from first this part, this one. So here question says that how many preferred stock companies sell? 2,000 preferred stock companies sell, right? And what is the par value? Each share value is $100. Okay, each share value is $100. And from this value, 5% is your dividend. Because I remember, if you remember, I told you that if you buy preferred stock today, okay, you already know your dividend. So when you purchase this share, you purchase this share in the beginning of 2017. You purchase this share in the beginning of 2000 share. Now, if I ask you a question, what is the amount of preferred dividend? This is my question. What is the amount of preferred dividend? Because according to the theory, you purchase preferred stock, you know your dividend, right? So what is the amount of dividend? What is the amount here? So you buy 2,000 shares, right? You buy 2,000 shares. Per share is $100. That means you paid $200,000, right? You buy this share and you paid $200,000. And today you already know your dividend. How much? 5%, right? Equal $10,000. This is your dividend you already know from the very beginning. Today is 2017. Look at here. Today is 2017. You buy these shares. Okay, you buy these shares and you know your dividend. This is the dividend you already know. Clear? All remaining shares are common stock. All remaining, so 2,000 shares are only preferred stock and all remaining shares are the common stock. So we find we have two types of shares here, preferred stock and common stock. Company was not able to pay dividend 2017. You buy share, look at here, you buy share 2017, right? You buy share 2017, but at that year, company did not pay you any dividend. But company paid dividend when? Company paid dividend in the year 2018. That means 1 year later. And what is the amount of total dividend? The amount of total dividend is $22,000. Do you understand? You buy share 2017, but company said that we did not have money. We are not going to pay you dividend. Okay. Company came another year, 2018. They said that now we have money. Now we are going to give you dividend. And they declared dividend $22,000. This is the total amount of dividend. You cannot consider more than this money. Whatever you are going to do calculation, you have to keep it in your mind that total dividend is $22,000. You cannot pay as an accountant. As an accountant, you cannot pay more than $22,000. Now we have two assumptions according to this question. First assumption said that assuming preferred stock is cumulative. Do you understand? Now we have to remember the picture. Second assumption said that preferred stock is non-cumulative. Okay, so we have two pictures. Based on these two pictures, these two questions. First assumption said that assume that preferred stock are cumulative. If preferred stock are cumulative, how much this $22,000 dividend How much this $22,000 dividend goes to preferred stock and how much to the common stock. Clear? Company paid total $22,000 dividend, and assuming that we have two groups according to this assumption one. According to this assumption one, two groups: cumulative preferred stock and common shareholder. Okay. And according to assumption two, we have two groups: non-cumulative preferred stock, and common shareholder. Now I am going to show you how to allocate this money. First, let's see the assumption one. So first you have to remember that what is the total amount of dividend? Total dividend according to this question, it is $22,000. This is the total dividend. So you cannot pay more than this money. So total dividend is $22,000, right? Now this $20,000 according to assumption one, some part will go to the preferred stock. So we don't know now what is the amount here. Some part will go to the preferred stock, some part will go to the common stock. Some part will go to the common stock. So we don't know, we have to do some calculation. And question says that preferred stock means they have another characteristics. They are preferred stock, but they belongs to cumulative. They belongs to cumulative. This is their identity. Now go back to this picture. So preferred stock, cumulative, right? And can you remember which is the first priority? Right hand, this one is the first one number, right? According to this rank, you are going to receive, okay, for example, this is $22,000 according to this question. $22,000 according to this question, you are going to, as you are cumulative, right? As you are cumulative, you are going to receive unpaid dividend first, right? Dividend in arrear means unpaid dividend. Unpaid dividend. So, and we know what is the amount of dividend. We know that the amount of dividend is $10,000, right? $10,000. So now I can mention here both hand. The first hand is called, that means 2017. This year is called dividend in arrear, right? Dividend in arrear. And this is right hand, left hand is called 2018. It is called current year dividend. Do you understand? This one, dividend in arrear plus current year dividend, right? Okay. And when we do some calculation, we find that dividend, we are going to receive how much? $10,000, right? $10,000. So 2017 dividend going to give first. So total is $22,000. From here, $10,000 given for the dividend in arrear. Another $10,000 is given for current year dividend, right? So total $22,000. Cumulative people receive this two money first. This two money first. Dividend in arrear, then number two is the current year dividend, right? Then the remaining money goes to common shareholders. What is the remaining money? Total is $22,000. Total is $22,000 minus $10,000 for dividend in arrear minus $10,000 for current year dividends. What is the remaining? 2,000. Yes, 2,000 goes to common shareholder. Do you understand? So this is about first assumption, preferred stock cumulative and common shareholder. Then let's see the non-cumulative. Assumption 2. This is assumption 2 say that they are non-cumulative. They are non-cumulative, not cumulative. Do you understand? Now, how to allocate this money? How to allocate this money? This is the question. We know the total is $22,000, right? And the non-cumulative picture is here. Can you remember what is this? That means he is not going to receive any previous year unpaid dividend, right? Only current year dividend. So here, this amount is 0. This amount is 0. 27,000 dividend in a year, completely lost, right? Completely lost. So what is the amount of current year dividend? Current year dividend is $10,000, right? $10,000. This is the current year dividend. Now, how much money goes to common shareholder? Yes, 22,000 minus 0 minus 10,000. So $12,000 goes to common shareholder. Do you understand? Now, second question. The same question I just changed some here. So again, Nathan's athletic apparels has 2,000 shares, 5%, $100 par value preferred stock. Right? Now, if you buy this share, what is the amount of your dividend? What is the amount of your dividend? Your dividend is this. This is your dividend. This is your dividend. So you find that $10,000 is your dividend, right? And when you buy this, you buy this share in the year 2016. Clear? In the year 2016, you buy 2,000 shares, par value $100, 5% dividend. So $10,000, you know, this is your dividend. And all remaining shares are common stock. Company was not able to pay dividends in 2016 and 2017. So you bought this share in the year 2016. So you did not receive any dividend. 2017, you did not receive any dividend. Now 2018 came, and company declared and paid only $22,000 dividend. Okay, same question. We have two assumptions. First, how to distribute this money to the preferred cumulative, and remaining goes to the common shareholders. And the second question, non-cumulative and common shareholder. Right? So the same question we are going to solve. So according to this question, total dividend is $22,000, no change, right? But we have another change here. This is the story actually. Total dividend $22,000. Preferred stock cumulative. You purchase this share 2016, no dividend. 2017, no dividend. Then company pay dividend in 2018, right? And we have remaining common stockholders according to assumption 1. And we know that total is $22,000. We cannot pay dividend more than this money. Anyway, the total is 22. Now you can see that this is the dividend for 2016. This is the dividend for 2016, right? What is the dividend for 2017? 10,000, right? What is the dividend of 2018? Yes, so if you write 10,000, it is over 22, right? It is over 22. You cannot do it. So it should be 2,000. Very good. 2,000. It is 2,000. So if it is 2,000, what is the dividend for common shareholder? 0, right? So you can see that 22,000 minus 10,000 minus 10,000 minus 2,000. There is no money for remaining to pay them. It is 0, right? It is 0. So if I ask you a question, what is the dividend in arrear in 2019? What is the amount of dividend in arrear for 2019? That means if 2019 came, look at here. So what should be the amount here? For example, for your information, 2019 company also declared 22,000 dividend, okay? 2019. Now, what is the answer here? What is the answer here? If this is my question, 2019 company declared $22,000 dividend, okay? Then how to allocate this money? How to allocate this money? What is the dividend in arrear for 2018? 8,000, very good, because 2,000 already paid, right? You understand? This is the beauty of this question. So 2018 already paid $2,000. So you are going to receive remaining unpaid dividend first, right? Remaining unpaid dividend first. Then current year dividend, how much? 10,000, right? And what is the common shareholder? 4,000, very good. Yes. You understand? So please read the question very carefully to answer this kind of question. Now look at assumption 2. Look at assumption 2. According to the second assumption, there belongs to non-cumulative. There belongs to non-cumulative. If it is non-cumulative, this amount is 0, you know that. This amount is 0, right? 2016, unpaid dividend 0. What about 2017 unpaid dividend? 0, right? What is the amount of current year dividend? $10,000. because they are non-cumulative. Last 2 years, they did not receive any dividend. And this is completely lost. This is completely lost, so this is 0, right? This is 0. And current year, they received $10,000, right? And the remaining $12,000, remaining $12,000 goes to the common shareholder. Do you understand? So this is question 2. Then read question 3. So question 3 said the same company has 2,000 shares, 5%, $100 par value preferred stock. Same question. So what is the dividend here? Dividend here is $10,000. This is the dividend. Dividend for which share? Dividend for preferred stock. Okay, preferred dividend. And the when you buy these shares, you buy this share 2016. That means you are entitled to receive $10,000 from 2016, right? Because you buy this year, so you should receive dividend this year. Anyway, company said that the remaining shares are common stock. Remaining shares are the common stock. Okay, and the company was not able to pay dividend in 2016 and 2017. So these 2 years, company did not pay any dividend. Same question from question 2. Question 2 and question 3 similar, but I change only here. Before dividend was $22,000, right? Total. Now I mention only $20,000 dividend. This is only one change. If you compare question 2 and 3, same question, it was $22,000 dividend, right? Now I make it only $20,000. All other part are similar. All other similar. Now how to allocate this $20,000 for cumulative and non-cumulative? You can see the same question. This is the same question, but only change is here. This is only one change. Total is 20,000. You cannot pay more than 20,000. So if this is the case, then what is the amount of dividend? Because you are cumulative, right? You will receive unpaid dividend first, 10,000 from 2016. Then total is 20,000, right? Then what is the amount you are going to receive for 2017? What should be the dividend for 2017? Also 10,000. So 10,000 and 10,000, right? What about the dividend of 2018? Also 10,000? No, no dividend for the current year, 0, right? 0. And common shareholder will also receive no dividend. Now, if I change this question like this, this is the next year. Next year again, company declared $20,000 dividend, for example. Okay. So what is the amount? Question mark here. So 2019, company declared $20,000 dividend. Now, what is the dividend in arrear for 2018? 10,000, right? Because here you should receive $10,000, but you did not receive any dividend because company cannot pay you more than 20. So here you are going to receive 10,000. Then current year 10,000, common stock 0, right? Common stock 0. If I change the number here, it is 18,000. If it is 18,000, then 10,000 here 8,000, right? Something like this. So this is the story actually. This is the story you have to remember. Now non-cumulative. (2016) 0, 2017 0, 2018 10,000, 2018 10,000, and another 10,000 goes to common shareholder. Okay, so total is $20,000. You can see the total is $20,000, right? And you are non-cumulative, not mistake here. You are non-cumulative. So total 20,000 dividend. You are non-cumulative, so you are not going to receive any unpaid dividend. Only current year dividend, and remaining goes to common shareholder. So this is the story. So you have to remember this kind of picture. First, this picture you have to remember: preferred shareholder will receive dividend first, then common shareholder. Then preferred has two groups. One is cumulative, another is non-cumulative. If you are cumulative, first payment is previous year unpaid dividend, then current year dividend. If it is non-cumulative, previous year unpaid dividend completely lost, only current year dividend. And when we make the ranking, this is the ranking. The first number is here. Previous year unpaid dividend for cumulative. Then cumulative current year dividend. Then non-cumulative preferred stock. Then common stock. So these 4 steps are important for your exam. I can give you a question by combining these 4 groups together. Okay. In one question, you will have cumulative, non-cumulative, and common. Okay. And cumulative, you know that how to handle this. So this is about how to distribute dividend to the shareholder. This topic is how to distribute dividend to the shareholders. Now I am going to show you the journal entries. Journal entries. Dividend. What is the definition of cash dividend? This is the definition of cash dividend. A cash distribution of earnings. Here earnings means you have a net income. You have net income. Now shareholders are the owner, right? So this money goes to the shareholder as the owner. So a cash distribution of earnings. What is the meaning of cash dividend? Cash dividend means a cash distribution. Cash distribution means cash paid. Cash paid from net income. This is the keyword. A cash distribution means cash paid from net income. Okay. To whom? To the stockholders. To the stockholders, and it is called cash dividend. So what is the summary? Summary here is, if you receive any cash from net income, it is dividend. Do you understand? Very simple definition. If you receive cash from business, okay, and this cash came from the net income, okay, this is the dividend. So if you remember, in our first class, I explained that net income, for example, net income $50,000. From here, some cash paid. Some cash paid. Okay, maybe $30,000. And this $30,000 is called the dividend. Do you understand? Net income $50,000, and from this net income, cash paid $30,000, and it is called dividend. What is the remaining amount? $20,000. What is the name? What is the name of this $20,000? Can you remember? Yes, very good. The name of this $20,000 is called retained earnings. And what is the meaning of this retain? Retain means this is your money, but company keep it, retain it. Okay. And company said that I will return back your money later on. But today I want to use this money for extension of the business. Although this is your money, right? Although this is your money, I will give it to you later, but I am going to retain this money, and I have an intention. What is the intention? I will use this money to extend your business. Something like this. Now, if you remember my first class for this chapter, okay, retained earnings normal balance was credit. Can you remember? Retained earnings normal balance was credit, and dividend normal balance was debit. Can you remember it? In our first class of this chapter, I told you that retained earnings normal balance, okay, retained earnings normal balance credit, okay, retained earnings normal balance credit, dividend normal balance debit, right? Then I told you that common stock normal balance credit, preferred stock normal balance credit. Can you remember? Treasury stock normal balance debit. So you have to remember my first class of this chapter, that I explained who are the components of common stockholders, who are the components of stockholders equity, and what is their normal balance. So we learned that dividend normal balance is debit. Because we are going to record journal entries, so this is important. This is important. So you should know that dividend is debit. Now I am going to show you the journal entries for the dividend declaration and payment. Okay, dividend declaration and payment. So in the real business world, company declared dividend. Anyway, so this is, I already mentioned you that dividend normal balance debit, right? I already explained this. Dividend normal balance is debit, right? And when company declared dividend, look at here, when company declared dividend, the dividend increase, right? And as normal balance is debit, dividend increase also debit. Usually dividend do not have credit balance, because net income is your money. I give it to you, right? And I cannot ask you, please give the money back, because this is your money. I already give it to you. And when I give it money to you, I already record dividend debit. Clear? So usually dividend do not have any normal balance. Dividend do not be credited unless closing entry. If you do not close the dividend account, okay, if you do not close the dividend account, dividend is always debit. But if you close it, it is credit. Do you understand? If you close dividend account, it is credit, but normally dividend is debit. So this is the story of debit credit. Now look at 3 important dates. This is based on what actually happened in the capital market. In the capital market, company declared dividend one day, but company pay dividend in another day. Do you understand? For example, I am the board of director of this company. Today, I declared you that you are my shareholder. If you hold my share, I am going to give you dividend. So I already declared the dividend today, but I am not going to pay you dividend today. Maybe I will pay you dividend 2 or 3 months later. This is the real business practice. So that's why we have 3 important dates. Three important dates. The first date is about dividend declaration date. Second one is about dividend record date. And the third day is about dividend payment date. Okay. So if I delete this middle one, first look at this two. We declare dividend when? When we declare dividend? We declare dividend on December 1st, 2021, right? And we pay dividend on another month, January 20, 2022. Do you understand? This is the real business practice. Dividend declare one day and dividend payment is another day. And in both days, we have journal entry. Both days we have journal entry. But in middle, we have another day. Try to see. In middle, we have another day. It is called dividend record date. At that day, we don't have any journal entry. At that day, we don't have any journal entry. So what we are doing at that day? Okay. At that day, we are calculating a number. How many shareholders will receive this dividend? For example, look at here. Look at this picture. Look at this picture. How many shareholders are going to receive dividend according to this picture? 6, right? 6 shareholders are going to receive this dividend because these shareholders are holding my shares. These people, right? These people are holding my share. So if you hold my share, you will receive this dividend, otherwise not. So here, according to this picture, these 6 people are holding my shares, they are going to receive dividend. So these are the 3 important dates. These are the 3 important dates. Company declare dividend one day, then company calculate, okay, how many shareholders will receive this dividend. After calculating, another day, company pay this money. So for example, here you are 40 students, 40 shareholders. All of you may not receive dividend. Why? Because you are not holding my share. Okay. So calculate number of shares outstanding. That means how many shareholders are holding my shares. How many shareholders are holding the shares? We just calculate the number, right? And based on this number, we are going to pay the dividend. You're going to pay the dividend. Do you understand? And you also understand that when company declare dividend, it is debit. Now read the question. Question said that Divine Apples has 4,000 shares of common stock outstanding. Which is this number based on these 3 dates? Based on these 3 dates, which one is this 4,000? Number 2, right? Number 2, we are going to calculate number of share outstanding. How many shareholders are holding my shares? How many shareholders are holding my shares? According to this question. According to this question, 4,000 shares are outstanding, means these 4,000 shareholders are holding my shares. Okay, this is number 2. We already calculated a number, right? For this, you don't have any journal entry. For this, you don't have any journal entry. Because when we sell the shares, can you remember in our first class, when we sell the share, we already record preferred stock credit, common stock credit, right? Additional paid-in capital credit or debit. So we already record the journal before. So we no need to do it again. Now we find that this is the people is here. So these people are going to receive the dividend. Now we know this number. Now we declare dividend. Company declares that if you hold my share, you are going to receive $0.75 per share as a dividend. Do you understand? If you are holding my share, so this question is only about common stock. Okay, this question is only about common stock. Because preferred stock, why we don't have preferred stock here? Because preferred stock people already know their dividend, right? Already know their dividend. So if you hold my common stock, per common stock, you are going to receive $0.75 dividend. And when company declared this on October 15. But when company pay this money, October 31st, cash dividend paid. Cash dividend paid. So we declare dividend one day, but we pay dividend in another day. So for October 15, look at here, October 15, no journal entry. October 15, we do not have any journal entry. Okay, October 15, we do not have any journal entry. Do you understand? In the exam question, you should also write this, no journal entry. Now we have journal entry for October 1st, and we have journal entry for October 31st. So what happened in October 1st? Company declared dividend, right? Company declared dividend. So here, look at the theory here. When company declared dividend, dividend increase. And dividend increase means it is debit, right? So we find that dividend debit. Dividend debit. And what is the amount of dividend? 4,000 shares are holding my share, right? 4,000 outstanding people are holding my shares, and per share is 0.75. That means 0.75, and it is $30,000. $30,000. So company declared dividend, right? And when company pay cash, look at here. Company pay cash in another day. Company pay cash in another day. October 31st, company pay cash. And when company pay cash, cash credit. $30,000. Do you understand? Company record dividend on October 1st, dividend debit, right? Company record dividend on October 1st, dividend debit. But company pay cash in another day, it is cash credit. If this is the case, what is debit? What should we write here? What should we write here? And what should we write in the credit side? Do you understand my question? So we record dividend debit, but we cannot, if you record cash credit here, it is your mistake, right? Why it is your mistake? Because you declared, but you not yet paid cash today. So we cannot write cash here. What should we write here? Dividend payable, because it is our liability, right? So dividend, very good. Dividend payable. What is the meaning of dividend payable? The meaning of dividend payable means dividend to be paid in future. Okay, and this is payable means to be paid, right? So this is your liability. And we know that liability increase is credit, right? Liability increase is credit. So this $30,000, is credit now. And we have to write a narration to record dividend. So this is the narration you have to write. So we record dividend declaration. And October 15, no journal entry. Now we pay cash, right? We pay cash credit. What should be the debit? What should be the debit? Dividend payable. Why dividend payable? Because if you pay cash, you don't have any liability, right? You don't have any liability. So dividend payable is going to record in debit side now. Dividend payable is liability. Liability now decrease. If your liability decrease, then you don't have any other liability. Now try to understand. First, you record dividend payable credit. Now you record dividend payable debit. It is zero, right? Do you understand? It is zero. You don't have any liability. Why you don't have any liability? Because you pay cash. Now, if I ask you a question in the exam, what is the journal entry? Like this, company first of all, this is October 1st, 2021. Company declared and paid what is the journal for this? October 1st, okay? October 1st, company declared and paid dividend $30,000. What is the journal entry? So this is October, okay? Okay, let me explain here first. Narration. You have to write a narration to record dividend payment. So you record declaration one day and you record payment in another day, right? But here I combine these two. On October 1st, company declared and paid dividend. If this is the case, what is the journal entry? This is the October 1st. This is October 1st. What is the journal entry for this? Company declared and paid dividend. If this is the case, do you have any liability today? Because you declared, when you declared October 1st, right? When you pay, you also pay October 1st. So what is the journal entry here? Cash credit. And to record dividend declaration and payment. To record dividend declaration and payment. So this is not the real business practice. This is not the real business practice that company declare dividend and pay immediately. It is not like that. The real business practice is this one. Company declared dividend one day, this one. Company declared dividend one day and payment in another day, right? Ultimately, look at here. Ultimately, this liability is going to close. It is credit $30,000, debit $30,000, close, right? Finally, it is dividend and cash. Okay, within 1 year, it's become dividend and cash, right? But this is not the real business practice. Do you understand? Do you have any question? So, okay, if you don't have any question, then that's all for today.